What's going on, guys? Brian's here. Today is Thursday, April 7th, 2022, and the market is closed. Now, it's been a while since I've done a video focused on the volume profile, and I wanted to show you guys how I'm necessarily using the volume profiles currently as I'm looking for bigger trades. The market has been pretty choppy the past couple days, so we can actually jump into the volume profile right here. And I want to show you guys one thing that I generally look for are the bigger moves, and you'll be able to start deciphering that one point of control or one volume profile is a little bit more important than the other one. So if I didn't mention it in the previous series, this is what's referred to as a P profile right here. And I believe I showed actually an example of the P profile and a B profile. And I think the video is when the market is choppy, certain things to look for. P profiles I really like them because if you look them up in certain books, there's more classical definitions for what you want to look for pertaining to them. Why I like them is it shows that there's a lot of conviction in a certain area. So if we look at this again, what I did is I'm showing the volume profiles without the candlesticks on, so that's why it just looks like a magic trick. If this is the first time you're seeing this, all I did was just change the opacity of the candlesticks to make them invisible. That way we can just focus on the volume profile, but I will switch between the two and you guys will be able to see the candlesticks after, as well as we'll go down to look at the actual candlesticks without the volume profile on after we actually draw out some of the important volume profiles as well as important points of controls. So as we zoom out for a second here, I'm isolating this day because we can see right here as you first start glancing over the chart, you want to mark significant ones like this. So assuming this was back in time, we'll actually put this here. Let's change the color. As you guys know at this point, if you've watched any of my previous videos, let's just set this to yellow, and at this time it would have been a virgin point of control or a naked point of control, depending on how you like to call it. VPOC can be stand for also volume point of control, which is different from the time point of control, but this video is not necessarily about that. As we look at this right here, why I like this volume profile is because this is the length of this entire candle right here. So if we were to go to, this is Tuesday, what day is this? This is the 22nd of March. If we jump to the daily time frame and we look at this day right here, look at how huge this day was right here. So from the low all the way up to the high, it was about an 80-point move on the ES. If we go back to the volume profile this day, look at how wide this value area is. So let's change this right here. So from 80 points, this was about 24 points. So the value area was very concentrated and it was very condensed, and that's showing a lot of conviction behind the market participants at this level. So some of you, I've mentioned this before, you can actually just put a mark over the entire area because that's something you're going to want to take note of. Again, the reason I'm isolating this is because look at the ratio between the value area in relation to the entire height of the whole candle. We can see this right here. So this is the value area, this is the whole candle, and look at the ratio right here. So if this is 1, we have 1, 2, and 3. So it's almost a 1 to 4, 1 to 3. Again, the exact science is not really relevant. What's important is just to be able to spot that this is a very concentrated zone. So if we dial a little bit in, a little bit closer, extend this, taking straight from the series, the links to previous videos on this topic will be in the description down below. But let's just say we wanted to really isolate out this zone. Let's activate this for a second and kind of cover over all the high volume nodes. When I'm referring to high volume nodes, I'm referring to, if we see, we split this, the volume, these are the volume nodes right here, right? And this is where it kind of spikes out, and this is where it kind of comes back down. This right here is our point of control. This, if we split this in half, we can see like right about here, this is the highest concentration of all of the volume right here. So that's why I'm choosing this as my reference points to actually draw the zone across. If we change this at this point in time, let's just say it would have been a supply zone, and because it's a supply zone, we'll make it red, change the opacity so it's not screaming in our faces. And then let's just auto zoom out. Let's take this and just extend it out for a couple days, because at this point what we're going to do is we're going to kind of go back in time and pretend as if we are on demand and viewing how this price action ends up being important. Whenever you see this type of profile, again, this is a P profile, and then the following day the market gaps down, if it comes back to this zone, that's going to be a high conviction level to look for a short. It's not just your ordinary supply zone, it's a supply zone within an area of high concentration of volume relative to the entire day, and that's what makes that different versus if we come to this day right here. Today, this is pretty much, I don't really pay that much attention. This is a little crazy. It's pretty balanced. There isn't tremendous amount of edge, in my opinion, looking at these types of profiles. So whenever I see those types of days, especially when I'm looking for the larger moves, I'll tend to disregard that. So we now jump to the let's actually go back to the candlestick right here, and then you guys can see what it looks like. But actually, let's just skip right ahead. So as we just rewind back in time right here, and let's actually walk ourselves through the price action. So as we zoom in right here, this is the end of that day. So the first thing you're going to want to do is obviously update your point of control for that day. And at this point, you wouldn't necessarily have a zone over the whole day yet. What's going to happen is the following morning before the market opens, when you're doing your pre-market analysis, this right here is where the market would be. So you would want to draw your zone over from the previous day. You guys already know where we got the zone from. It came from, if we just come back right here, this is when we drew out the zone. So you guys can see it right here, this high volume node. The point in time in which we're looking at is currently right here. So let's just jump back to the intraday time frame. All right, so pre-market, you're looking at this, you have your zone, so you have some sort of a game plan. You know, if the market was to come back up to this level, this is going to be an area in which you'll look to take on some sort of short position. Now, as we can see, the market opens, it ends up doing a little bit of price action like this. It goes sideways, comes up to the zone. Let's just say you missed that trade. At the end of the day, it didn't necessarily come up to the point of control, and it didn't really violate the zone. So you can say the zone is still going to be in play for the future, because remember, there's a lot of concentration of volume up here. And one little touch like this is not going to necessarily make that supply zone invalid. So as we continue to move right along, we can see that the market sold off, and then now we're talking about pre-markets the following day. So this is now Thursday, 2 days after in which we've had the zone. You would still have this zone up on your chart as well as this point of control. And we can see as the markets, as we get to the starts right here, the market opens and we end up finally coming up to this point of control. Now, occasionally you're going to get the exact tick touch. I'm not necessarily focused or looking for the exact tick, because at the end of the day, it's about understanding what's going on, the psychology behind what's going on up here, and understanding that it's an entire area. Occasionally, again, we will get it pretty perfect and it will be to the tick. Different platforms show the points of controls at different levels. So I use NinjaTrader and as well as Thinkorswim. NinjaTrader is my primary account whenever I'm trading the futures, as well as it's my primary account whenever I'm looking at the volume profile, because I really like the way they've built it in that system there. But the Thinkorswim point of control, or the Thinkorswim volume profile, is sufficient enough just to be aware of where the actual area is. You know, if you were not long during this rally, you don't want to be long. Now, as we move forward, we can see we get a little bit of rejection. This is the 15-minute time frame that we're looking at. Look at the type of rejection that we get right here. You can see how prices is struggling to go higher, so you do get some sort of a short trade. The important thing that I want to take note of is if we were to rewind back here, you can see that it did come up to this zone right here. The one way to interpret this is if we zoom out. The reason this works this way is everyone that purchased this day, there was a lot of eager buyers up here thinking that the market was going to go higher. We can draw out some sort of technical analysis pattern. We had an ascending wedge breakdown right here. But usually when we see this type of bull stepping up or buying pressure increasing or people hitting the ask and we can see price going higher and higher, a little bit of greed kicks in and people are willing to keep pushing price higher, especially momentum-based traders, because they're trading in the direction of the trend or they're trading in the direction of the momentum. What happens now is all these participants that had a price up here that were comfortable, as they open up their screens the next day, they're now down. The first thing they want to do is get rid of their positions. Now, I've done a video on the psychology behind this, but the thing to think of is think of yourself for a second. If you purchase something, an asset for $100 right here, and then the next day it's going for $90, you're not going to feel that good. And the first thing you're going to want to do is say, man, I hope it comes back to the price in which I purchased it, because I would love to get out of this position. And that's the same thing that a lot of other people are thinking. So that's why once it comes close to this zone, it rejects off of it pretty quickly, because these are a lot of people noticing that they purchased right after the market made a push up right here, and they're not secure or confident in their positions. The same thing when the price comes back to here. These are the same people. There's also shorts that are, hitting the bid and actually driving prices down, but there's also a little bit of inventory up here, and that's going to cause this type of price action. I've done a more detailed video behind this as we get into the psychology of what happens over here. This is by far one of the setups that I tend to really look for, because I'm not that fast and I can't necessarily decipher a lot of the information very quickly, which is why I don't consider myself a momentum-based trader or a scalper. But if we take a look at, if you miss the short here or you miss this short here, the next best thing to do is look for the break and then the retest of the level, because what happens is the same situation in which we said if you bought something here for $100 and then it sells off and now it's going for 90, you want to sell it once it comes back to $100. The opposite works for people that are shorts or bears in the market. If someone shorted this right here for $100 and then it dropped down to 90, they're very happy because they took the opposite trade in the direction that everyone thought the market was going. They're happy, they're able to buy back the asset for a cheaper price, and they profit. That's what essentially what shorting is. Now if they shorted it for $100 here, and then it came back up and they shorted it for $100 again, now they're feeling really good because they're thinking it's going to then break this support level and go a little bit lower, and they're going to get a bigger profit. However, what ends up happening in this case is the market pushes higher, and then they're like, oh crap, now it's going higher, we don't know how high it's going to go. They need to get out of these short positions. So as you see, it comes back down to the zone. These are essentially some of the shorts that were back here, as well as here and here, now covering their positions. That right there is often referred to as the break and retest, and that's what we're seeing right here. Here is a zone. It's worked a couple times here, a couple times here, and then it actually ends up breaking, and then when it comes back to the zone, this is the retest right here. I like to take the retest because it's a clear defined risk. I know exactly where to place my stop loss if we get back below the zone, because it means there's not enough people stopping out, there's not enough buyers here, or there's not enough demand. And that's just traditional technical analysis when you first start learning price action. Previous resistance, so if we have resistance in the future, it becomes future support. If price was to break past it, it comes back to the level. It generally acts as a support in the future, even though before it was resistance. A little bit of the psychology behind why that happens is that brief explanation, but if you're interested in understanding more, it's explained in that video, and that's exclusively what I was talking about there. So this zone that becomes invalid, you can either remove it from your chart or you can change the color. And what I often would like to do is I'll just make it gray for a bit, or I'll turn it green. And let's just adjust that for a second, and let's pull this in right here. So this is as you're going, whoa, that's a little bit too bright still. Let's just lower the opacity and press OK. All right, so now we're talking about this day here. Here's a little bit of a short trade, but now as we push forward, so again, let's just say you're hesitant or you're afraid still to short. That's pretty fair, because it's honestly a different craft, or it takes a different level of expertise to understand what's a good short setup versus what's a good long setup. But as we continue to scroll along, your job now, as soon as the market closes, is to change this. It's no longer a virgin point of control. You can leave it up and just change it and say point of control. So for example purposes, I'll just demonstrate for you guys. Just put POC right here, and I only use this color for points of controls. That's why I don't need to necessarily label that it is a point of control. I know if it's this golden yellow color, it means it's a point of control. And the reason we're going to leave this one up is because, again, it comes from this P profile over here, and this volume profile is a little bit more significant than some of the others because of the concentration up here, as well as the amount of time that the market spent here. You guys can see it spent, so if we're looking at what's referred to as the TPO, which this video is also not about, but I've mentioned it in previous videos, this is the time price opportunity. This means that the market spent the bulk of the day also in this zone. So not only was there the bulk of volume, but there was also the most amount of time spent here. You can see the market did not really spend that much time down here. It only spent about 45 minutes or so before it hit this area, and then it remained here for the next few hours. So you're going to want to leave a point of control like this one up, and then we can see as we move forward, this zone still ends up being in play, because this is the first real deep retest into the level. So hopefully that provides a little bit of clarity there as to which zones you might want to leave up on the chart, as well as which ones you want to take off. Now I want to show you guys another example of how I'm assessing this or digesting this. So if we jump back for a second, let's zoom out and let's go back to the profile right here. Out of these, we'll say from this Monday all the way to today, you can pause this video and try to guess which one of these profiles do you think is going to be the next significant one, in my opinion. I'll give you a clue. It's not this one, although it would be pretty fair if you thought it would be this one. This one is equally pretty good, but take a second and think which one. All right. If you have your guess, let me reveal it right here. It's this one. Now, the reason I'm intentionally pointing out this one is because you might say, well, Brian, didn't you just say, look at the value area? This value area is so wide in comparison to the entire day. That's pretty a fair assessment. Also, if we jump back again, this value area was very nice and condensed, whereas this one is wide. The reason I'm pointing out this one is because sometimes it's not just about the actual value area. Sometimes it's about just look at how high the volume nodes are for here. So if we were to split this right down here, so we can see that this is this is a lot bigger chunk of volume that occurred around this price relative to the rest of the day. You can see this was spread pretty thin, and then it really sticks out right here. So if we were to draw now a rectangle over this zone, so starting from here, extend this out. And at this point, this would be a supply because you can see we gapped down. So it means if price was to come back to this level, we want to look for some sort of a short trade, right? Or a short setup, some sort of bearish position. And if we were to change the opacity again and adjust that, and let's also put in our POC. So all we have to do is just duplicate this and drag this one up and move it over. And now we have a POC right here. Market is all the way down here the following day. So now let's do our fake on demand, and actually let's jump right here, and here we go. So this is where our point of control is coming from. This is also where our supply zone was created. Now we move forward in time. This is the next day. There's not really much going on. We see we come down to a previous point of control down here. And the other thing is I'm a lot more of a patient trader, whereas I'm not looking to take every single position or every single point of control. I look and I'm very patient and I wait for the very prominent ones, if you will, which is why I'm deciding to make this video, just to clarify certain things for you guys. So you can see this same demand zone is coming back into play here, and that's coming from that very high concentration area on the P profile. This one is significant because of how large it was on the volume profile relative to the range for the rest of this day, because this is the ES is high, this was the ES is low for that day, and this right here is where the bulk of all that volume happened. So it's going to be pretty important. Now as we move forward in time, beautiful candlestick, long wick rejection off of it, nice hammer candle, and then we get a second opportunity right here, stop below the zone. If you're targeting these bigger swings, which I often am doing because I'm using spreads, I'm usually using some sort of butterfly spread or a calendar spread. You can structure your trades where theta is not going to hurt you that much. That's covered in other videos, but as we move right along here and we're just focusing on price action, you guys can see at this point now the market comes back into this supply zone. This right here would be Friday, right? Let's actually take a second and swipe over to the Discord that I'm the head trader at. I'm also the lead developer at Quant Trading App. Quant Trading App is an algorithm in which I use. It's a platform that actually helps create buy and sell zones, as well as a lot of other statistical information that we help use when structuring our trades. But as we scroll right here, this was on Friday. So this was posted on Monday here, and this was just in the head traders tab, which is pretty much just some of my notes if I think it's really significant and I don't want anyone to miss out. Generally, whenever I mention something, it means if I post something in here, it usually means that it's going to come in play and it's going to be a high inflection zone. This is pretty close to the virgin point of control. This is for the SPY because most of the traders in here are using the SPY. I use the ES and the SPY. So this right here was a virgin point of control. You guys can see it's on the chart, and that's essentially this level down here in which we have on our chart, if I remember correctly. But as we scroll here, so now what I'm pointing out right here is this is that VPOC, this is that supply zone. It's on a Friday. Post this on Monday. Essentially, anyone that knows how to read any of this just means look for an opportunity to short here. It doesn't mean you just blindly short. My chart is pretty clean. The only VPOC I have on my screen is this one and this one right here. Anything else in between, this one I don't really care about. The one that's going on from this day, I'm not so concerned with. This one I'm not so concerned with. This one has my interest and it has my attention. It's isolated out because of the experience that I have of looking at volume profiles for as long as I have, and knowing that you can weed out a lot of trades that are going to drive you crazy if you just focus on the key ones. Now, as we can see a couple days later, as we jump forward in time, let's actually scroll back over, swipe these through. So this is how this was, so you guys have a little bit of context. Again, this was the Friday. Now we have the Monday, and we can see it hits this zone here. Now if we scroll forward in time, now let's jump to the following day, which would be the Tuesday, and you guys can see what ends up happening here. So the market ends up selling off. It's testing the zone. It looks like the selling is being absorbed, which it is to a certain extent. Market pushes up, looks like it's going to go higher. It gets rejected at this VPOC. It was touched in the overnight session, also happens to get rejected during the RTH. RTH just stands for regular trading hours, and we can see this rejection here. Now, what I end up posting for everyone is the selling and supply zone is being absorbed, and 10 of the 11 sectors are green for today. So this isn't something you necessarily want to short. I don't like shorting whenever we see all of the sectors are green at the moment, because it means it's usually just going to be a scalp or a pullback, which is fine. But as I mentioned at the beginning of this video, I'm not really looking for the scalp or the small move. I'm looking to see where's the opportunity for the larger move. So I'm suggesting if you're looking to take for a short, you might as well short the weakest sector right now, which would be technology. And the easiest way to do that is to short the NASDAQ. So a QQQ. So using this information, we can put together a trade, but knowing that this is not a trade to just scalp. This is an opportunity to take the trade all the way back to a deeper demand zone, or scale out obviously accordingly, because every situation is different. But if we were to right click on the chart and zoom out, you guys can see that this is the area in which we're talking about. Look at the deep pullback that occurred from this level, as well as if we zoomed out, look at the bounce that came from this level. These levels, there's a ton of other points of controls, there's a lot of other value areas in between, but the two ones that are very significant would be this one from here and this one from here. And you can see the type of trades that bounce off of these levels. So from the moment this was here, I was already targeting something like 4,500. Now, if I were to show you how I structure a trade like this, let me just show you an example of a butterfly. This is the last piece of a butterfly that I have on the SPY. This is essentially saying I was targeting 448. That's the body of my butterfly. So I'm shorting two of those puts, and then I'm buying a wing here and a wing here, and that creates this structure that's referred to as a butterfly spread. This video is definitely not about spreads, because that would take too long to explain, but just know this is, again, the last piece I'm holding into Friday. This is the current P&L left open on this last piece. I forgot how much I got this spread for. It was dirt cheap at the time, but you guys can see that knowing this information, if I'm aware that we're probably going to want to come back to 4,500, I went with 448 right here, because I thought it would go just a little bit below the zone. I was expecting it to get violated a little bit more. So essentially this area, the market ended up chopping around this area for the past couple of days, which is an amazing thing that you want to have whenever you have some sort of spread looking like this. So at the time, the market was all the way up here at, we'll say a 45.60 at the time. I waited to see there was confirmation of a sell-off, so 45.60, so all the way over here. The market ended up selling off 8 points down to my short strikes, and now I'm just letting theta essentially do its work, because I've essentially been already paid on having a negative delta position in the time in which I open it. And now we can see the market ended up closing right around here at this 4,500 level, which we still have from over here. So this is one zone, two zones on the chart. If we to conclude this video, if we zoom out for a second, the next zone that I would have to be aware of is something like this down here, because that is still a naked point of control or virgin point of control. Let's duplicate this. Let's just drag this down right here, make this say V, so that way I know this is definitely one I want to have on high alert, because it's still virgin. And then let's just duplicate this for a second right here. This is our demand zone, and let's just drag this and try to cover a decent amount of the value area. Drag this right up here. Now the reason I went all the way down here is because you see we have this POC right here also, so I might as well just draw it all the way here just to get some sort of an idea. Now whenever I have something that says V on the chart, if price hits it, then I'm generally going to look at a larger time frame, like a daily or something like that, just to see where it's coming from. But now we have this is a more important zone than looking at all of these other levels in between, because these, in my opinion, will just drive you nuts. Now obviously these two levels and this one, this is 3 points of controls that are pretty close to each other, so you more than likely have still one of those on your chart to know that, you know, if price came down to this level, because this is a deep drop, you're obviously going to want some sort of profit target between, you know, here and here, and that's when I would go look to further inspect. But then once prices consolidate around these levels for a bit, I'd much rather just remove it and be aware of maybe the value area low here and other things. That's where a little bit of how your trading style comes into play. And lastly, to update our chart, let's just duplicate this one now, and let's add today's point of control, which is going to be tomorrow's point of control. And normally whenever there's two that are so close together, you can just put something like maybe double the POC, or however you want to, your naming convention is. That way we just know this was 2 points of control. That way I know this is 2 points of controls that are essentially prices consolidated around for a couple days, so it might have some sort of strength for tomorrow if the market was to pull back. I actually already have a buy order out right here on an MES contract. I'm looking to get filled a couple overnight with a stop loss just below these value areas, and I'm essentially targeting this concentration of volume right here. So if I was looking for the next supply zone that's pretty close to the area, it would be this one. So let's duplicate that, drag this out right here, just because that's a really decent spike and a clear place to use as a profit target. So that would be about 452 on the SPY. Would also obviously put the point of control in, but to keep the video from getting any longer, the vergent point of control would be somewhere between here. But when you see such a small zone like this, you pretty much know that there's more than likely a POC in the area. Again, experience would tell you that. But hopefully this helps, and it's cool to see a couple of you guys in Quant Trading App, if you're watching this video, to have caught this short trade here, and a couple of you ran your put calendar spreads, which was neat to see. If we look at a put calendar spread, I ran with a butterfly, but if we were to do at this point, another thing you guys would know that the put calendar spreads are some of my favorite spreads to run. So you would have been targeting about 4,500. These are the put calendar spreads right here. Let's just say you did the same week expiration. Let's see, at that time on Monday on the 5th, where were we? This was the 5th. So at this point, the spread would have been going for about $3.37, and now it's going for $9, and you can kind of hold through this. It's pretty smooth to hold whenever you have these types of calendars. And if you trade the SPY because the SPX is too big or requires too much margin for you, let's actually adjust these, and let's just say you went with the same week. Maybe you widen the calendar. Let's take a look at the historical chart right here. So this is on the 5th, so $1.30. Now it's going for $2.40. Easy trade to put about 500 bucks, 600 bucks in, and you're not taking on much risk because you don't, it's not like traditional technical analysis or traditional risk management where if the zone is breached, you have to close out the trade. You have a lot of wiggle room because you'll generally have theta on your side for a bit, especially depending on how you structure the trade, depending on how far out you go and things like that. But again, that's topics for other videos in which I've done on the calendar spread. Hopefully this video helped some of you guys answer some of your questions. And if you want to see more volume profile contents, just let me know. I've been able to get a good gauge for that. A lot of you guys are really interested in this. So hopefully this helps, and I'll catch you guys in the next one.